ECP is a Luxembourg-based asset management boutique which history is strongly linked to the entrepreneurial spirit of its shareholders. Founded in 2010 by two Luxembourgish entrepreneurs, ECP was initially active in the non-listed assets, mainly private equity and real estate. During summer of 2014, I joined as a partner and started to develop the listed assets expertise of the company. Our Luxembourg anchorage is very strong, since it is from here, from the Grand Duchy, that all investment decisions are being taken. But our development ambitions for our investment strategies are European. Why did I join ECP? During all my career, I've been managing equity strategies with a strong conviction in the value investment style. After having worked for over 12 years for a large asset manager with a very powerful distribution apparatus, I realized that my investment strategy would be even more efficient if it were implemented in a less industrial outfit. ECP was the cocoon I was looking for. The legal structure was already in place, and I share the same entrepreneurial values as the two founders. The integration in an existing company and the close collaboration with local entrepreneurs allowed me to relaunch my investment strategies in less than 6 months after I joined. For me, as a portfolio manager, it was really crucial to be able to continue my track record as quickly as possible. ECP's DNA is articulated around several key values. The most important one is probably the entrepreneurial spirit. And not only because of our shareholder structure, which gathers some serial entrepreneurs, but also because when analyzing companies, we apply the basic principles of private equity investments to listed companies. We also view our independence as a logical consequence of our entrepreneurial spirit and as a strong component of our corporate culture. Then any entrepreneurial project requires conviction, which acts as a powerful engine for the development of a new project. But also investing actively on the equity market entails a strong conviction power, as well as some courage to sometimes think outside of the box and go against the crowd. But above all, the courage to remain humble and to admit of our own mistakes in order to learn from them. Last but not least, our aim at ECP is to align our interests with those of our investors. As a portfolio manager, I have invested a large part of my own savings in ECP's investment strategies, sharing thus with the other investors the benefits, but also the possible failures of our investment decisions. Our investment philosophy is founded on the following key concept: entrepreneurial value investing. Entrepreneurial. As I've said before, our analysis process is very similar to the one used by private equity investors, since we look at the company as an entrepreneur considering to take over the company. The golden rule is clear. We do not invest in a company if we are not fully comfortable with its fundamentals. Value. Experience has shown us that it is very difficult to properly value the growth potential of a business. Therefore, we do not focus on growth and look only at the current situation. Through the earning power, as we call it, we are focusing on the amount of cash a company can generate with its current operations. At the same time, we only invest in companies benefiting from strong earning power and which share price are trading at a sufficient discount, minimum 40%, compared to our target price. Investing. We are not traders. Our portfolio is concentrated and focuses on our main convictions, in which we invest typically for 4 to 5 years in order to allow Mr. Market, as Benjamin Graham called it, to recognize the underlying value of the businesses we invest in. Similarly, we do not want to limit our investment universe and keep a high degree of flexibility in terms of geographies, sectors, and market capitalizations. My first conclusion would be that even if the road is sometimes bumpy, I remain firm in my conviction that to come back to the roots of value investing was an excellent decision. In a small boutique outfit, the fund manager is forced to come down from its ivory tower and have frequent direct contacts with investors. This is an exercise of humility which is really beneficial for us, as by presenting them our investment cases, we are forced to accept potential remarks, whether positive or negative, to take a step back and question ourselves. It's an exercise to which I was less accustomed in my previous functions. We launched our project in a period where markets were mainly driven by momentum, which was not really favorable indeed to value strategies. But despite that, in just over 3 years, we managed to build, through constant teamwork, an ideal framework which enables us to implement our investment philosophy in the most optimal way, without conflicting interest with the distribution forces or other entities of the same group. The road ahead is still long. Distribution remains a challenge for small structures, but our motivation to succeed is unchanged. The asset management industry is experiencing major changes leading to new challenges. First of all, after the financial crisis, the regulatory environment has become, for very good reasons, more and more restrictive. The new regulatory wave has drastically increased the barriers of entry. There has been a cleanup in the market, which in some ways has been beneficial. Unfortunately, it has also the side effect of concentrating investor savings within large asset management companies or specific management styles like passive management. I'm convinced that active management is not that. However, I also realize that if active managers want to survive, they need to bring a real added value. It's not an option anymore to build a semi-passive investment solutions while charging high management fees. We think that by consistently applying our long-term flexible investment strategy, supported by a solid investment process and characterized by a high active shares, we will be able to generate this long-term added value. It is, however, essential to have an alignment of the investment horizon of active managers and investors. We cannot be judged looking at short-term market developments, but must be assessed on sufficiently long periods of time to allow our investment cases to develop, mature, and therefore generate returns.